Good afternoon, everyone, and welcome to this, our second event in the Newcastle Develop event series. Today, we're going to talk about things in the financial sector with a specific view on investment services, investment apps, and how to get started in that particular industry. We will have a bit of a light touch on investment apps, the rise of casual and digital investment, and the impact that's having within the sector, and we'll also have some time at the end to answer some of the questions that you've submitted beforehand. I'm delighted today to be discussing this topic with alumnus Michael Taylor, who is the founder of shiftingshares.com. And so without any further ado, I'm just going to pass over to Michael to do a quick introduction of who he is, how he's got to where he is today, and what his current role is before we get started.
Hi, Jeremy. Thanks for having me on. So I'm an alumnus of the business school. I did the Dual Award programme, so it's Advanced International Business Management at the University of Groningen as well. So I graduated that in 2015, moved to Germany, worked in recruitment. Wasn't what I really wanted to do. What I wanted to do was work in investment banking. Found it a really big struggle. Ended up in the recruitment sector and left that position to go full-time on the stock market, and that's what I've been doing ever since. I've been a little bit hairy, but so far it's going so well.
That's great. It's really interesting to hear how people get into the sectors they're in after they've graduated. It's increasingly clear for many people, not least of all our alumni, that it's not a straight path to the job that you end up wanting to do. So we're just going to talk around a couple of the big topics that I think are impacting investment and the markets and everything else at the moment. And one of the first questions is how has this current global pandemic changed the demographic of people that invest, and how people invest? What if there are any big market shifts?
So I think last year stocks were boring. So if I ever mention stocks to anyone, they call me boring. So I never really speak about my work to anyone other than the people I work with. But ever since the crash last year, we've had all of these apps like free trade, trading 212, people piling into stocks at the bottom. I mean, usually we would have a big crash, but instead we had lots of money being pumped in, so assets rose. So I mean, the crash was only out 3 weeks. It was like blink and you missed it. And since then, since the bottom of since the first lockdown began, that was the market bottom. So the last 12 months have been the best 12 months of all time ever in the markets, and people have been piling in. Everyone's making loads of money. It's great at the moment. And GameStop just seemed to take that to a next level. So I had friends who've never ever traded before, they were never interested in anything, and then they were all buying GameStop or telling me what shares to buy. And it was similar in 2017. We had the cryptocurrency bubble. You know, everyone was buying Bitcoin and getting all excited. But it is boom and bust in the market. We haven't really had a bust apart from those 3 weeks. But the good thing is people are getting interested in the stock market, and people are sort of realizing that you can make money long term, of course, because it's not a get rich quick thing unless you take on heavy risk. But there was a survey that I saw the other day that was quite scary. 4 out of 10 people who are getting into the stock market don't believe that losing money is a risk, which is quite scary, because it is a risk. You know, it's a hazard even. I wouldn't even call it a risk. It's just a given. You are going to lose money in the stock market at some point. But yeah, I think it's brought in a lot of people who otherwise would have never have thought about stocks, which is good. But I think those expectations of what is possible are a little too high, because if you didn't make any money in the last 12 months, you know, just pack up and go home, because you couldn't not make money given everything that's gone on.
I mean, that's fascinating, and obviously GameStop is probably the most, I hesitate to say mainstream, but the most popular sort of example of people getting involved in the stock market and buying stocks for the first time. So I'm sort of wondering what, as somebody who's working in investment and trading in stocks as part of as your job, what impact it's had on that sort of rise of casual investment, the rise of digital apps that allow people to invest without maybe super deep knowledge that traditionally you would have needed, and what impact it has on things like market value and volatility, and how you get the best out of what seems to be quite a different outlook for the stock markets after the past 12 months.
Yeah, so those apps turn the stock market into a game, which I guess you could call it a video game, because I mean that's sort of what it feels like to me, but it does have very real risks. And these apps sort of flirt with what is legal, I think, because they pop up with notifications incentivizing people to trade. And I'm not really sure you can even do that on betting apps. They have all of these risk warnings and disclaimers that flash up, such as when the fun stops, stop. But these apps I mean, on one of my apps, I've this stock is 20% up today. And if I open the notification, it'll bring up a dealing ticket trying to get me to trade, which would be silly for me to do that, because I only take a position if I've got a reason to take a position. But yeah, that to me it seems that there's a lot of gamification, a lot of excitement about it, which I don't really think it's too good. I personally would avoid these free apps, such as Free Trade, Trading 212. The builders low on no commission, but those costs show elsewhere. For example, one of them was free, but you could only place the order at the end of the day, which makes no sense at all, because you're basically selling and you don't even know what price you're selling at. You just give the broker a blank check to fill you with the market price. So when they're saying it's a free trade, it's a bit like having a car with no wheels. There's not really any point.
Yeah.
And a lot of them, such as eToro, will say no commission, but it's actually a contract for difference. You're not buying a stock, you're buying a derivative, which charges overnight interest on the derivative, on the position. So if you are going to sign up with any of these brokers, do look at the terms and conditions, because it's not all what it seems, and it's very misleading as well, I think, sometimes.
Yeah. Well, I mean, the good recent example is that during the GameStop frenzy, Robinhood put a slowdown on people buying stocks when it was getting really out of hand, and then all sorts of news came out that it was owned by one of the big hedge fund companies who'd floated the app in the first place, and were they unfairly supporting the big banks. So it is absolutely something that you need to be aware of if you're going to use one of these free apps to begin investing. I think it probably takes a good step into the idea of, if you want to get started on your own, or as a viable way into investment and the financial sector, in investment, what are the good sort of first steps to making sensible choices and getting your own almost career off the ground for investment?
So is that an investment career, or to do it yourself? Because those are two very different options.
If we approach both, so let's start with, if you wanted to do it as a career. So if you wanted to get started, you haven't gone through the Big Four or the graduate career track, but you want to now think seriously about getting into investment as a career. What are maybe some good things to think about, and some good first steps and best practices to do in order to get started with that?
Well, to become a trader now, you need computer science degrees, maths degrees, it's not, whereas before it would be arts based, or you could have any sort of degree and go into trading. Now it's really, I mean, what I do, discretionary trading, doesn't really exist anymore. It's all computer based and coding. So if you would want to get a job as a trader, probably that way is good, but also get your own record, get your own P&L, because people, if they're going to hire a trader, they will want to see evidence of interest and actual profitable success, even if it's small. You know, it can be scaled. You know, 5% of 1,000 can be 10,000, 100,000. 5% is always going to be 5%. And if you can prove you can profitably make that with good risk management, then people will take note of that. But yeah, for investment banking is completely different. It's really competitive, and I just wasn't good enough to get into it. But I'm also pretty glad, because it sounds, even now we've got the Goldman Sachs bankers complaining about being overworked. That doesn't really sound too much fun to me.
Yeah, it's something that obviously has come up in the news recently. The Goldman Sachs is a good example, that maybe the more traditional routes into investment banking are no longer, well, they're no longer the only routes into investment, and being able to either take additional courses to get into trading, or to bring your own experience, almost a little bit, not with any knowledge, but almost like being a freelance journalist, but a freelance investor, and then saying, here's my portfolio and my experience, and here's my success, profitability. So this is why I think I should be hired, is now an equally viable route into the investment sector, into the investment industry. If we really briefly maybe touch upon, for people getting started with your own investment, maybe instead of thinking about one of the big banks or big investment banking, what maybe first steps would be for people who want to dip their toe into investing for the first time?
So it depends what asset class that you want to trade. So I trade UK equities. We can trade Forex, which is quite common, but then that is seriously tough. The market that I trade, small cap UK stocks, is predominantly made up of people like myself and private individuals, rather than big banks who have far more knowledge than I ever could on the Forex markets. But any asset class that you would like to trade, I would recommend starting with a demo account. You know, I mean, the only way to learn is to put your own money at risk, but you should at least know the buttons and everything, and how to place orders, and when things can go wrong. But secondly, just educate yourself, because it sounds sort of obvious, but there's a lot of people that jump into the market thinking it's going to be easy, and it really isn't. You know, the failure rate for traders is like 90+%. It's probably one of the hardest professions to succeed in. And yeah, I would be lying if I said I hadn't worked hard. The last 5 years, it's a 6 to 7 day a week job, just to keep on top of everything, but it doesn't really feel like work to me. So I'm quite happy. But yeah, you have to enjoy it. You can't just do it for the financial reward, otherwise you'll burn out. But certainly just do a deep dive on the subject, and you will find other subjects and read up about them. I mean, the more knowledge that you have, the more likely it is that you are going to succeed. And start small as well. Don't go all in straight away, which for some reason people seem to do. But the way to do it is to get in slowly and compound the account.
So just coming as somebody who hasn't really done any investment before, would your recommendation be for things like start with the UK market, UK equities, rather than doing Forex, which I assume is foreign exchange, where you're trying to play on in international markets, and sort of know the limitations first before you decide if you want to try and get into those bigger international or diversified markets?
Well, I think investing is a lot easier than trading because you're playing over a much longer time span.
Yeah.
So I mean, I think investing is something that everyone should be doing, and I don't think you need a huge amount of money to get started. I mean, the dealer fees at a serious broker are around £5 a trade. And if you're not really trading very often, you don't really need a huge amount of money to get started. But yeah, I think diversify yourself across a number of stocks is probably the best way to go. But take your time as well.
Yeah.
There's a lot of hot money in the market right now. People who've made a lot of money over the past 12 months, and they're taking on bigger and bigger risks. But at some point, it's all going to come falling down, and those people won't really have the experience to get out of the market. You know, for example, I've been in the position where I've been trying to sell a stock, and I actually can't sell it because there's no one on the other side to buy, and I'm just watching the price fall, and there's literally nothing I can do because there's no market. You know, you don't really know those things unless you experience them. Like there's not really a book that will tell you. You know, most books always assume that you can buy and sell, but that's not always the case. So you always have to be wary of things that you don't know.
Okay, and actually something that you mentioned a couple of minutes ago that has cropped up as a question is you know, working as on investments and as an investor. Obviously, you've said it's a 6-7 day a week job, and so how do you achieve like a work-life balance? Do you think that's even possible for maybe a recent grad who's getting started in the market, or do you just have to accept that at least to get off the ground, it's a lot of hard work and you've got to make that sacrifice? And sort of an attached question that runs alongside that is, how's this lockdown made it any easier to do that kind of work-life balance, or has it just ended up merging the process?
So the first question, I mean, you need a certain amount of capital if you're going to do it full time, because of course you're then relying on withdrawing profits as for living expenses, which is stressful, especially if you only have a small amount of capital. I mean, let's say you have £50,000, but your living expenses are £10,000 a year. You've already got to make 20% on your capital just to actually pay your bills. So I mean that is quite a lot of pressure. So I guess to do it full time, it will certainly be better to do it as a side thing with the goal of then doing it full time, because I mean you need capital to be able to do it yourself.
Yeah.
Which is, I guess it's a barrier of entry to going full time, but there's certainly nothing to say that you can't get started straight away. And that is why I put in so many hours, because it is when I've started to diversify a little bit now, with some writing and my course. But you can certainly get started small on the side and build up to it.
Great.
The second part about the work-life balance, in the lockdown, when it was March, I didn't really have a work-life balance at all. I would be at the screens probably 12, 16 hours a day, and then going to sleep, getting up, going to my gym, and then back at the screens. But yeah, you can definitely have a work-life balance doing it, if it isn't your main source of income, I think.
Right. I mean, that's really useful to know. I think it's always really helpful to give people a really clear-eyed idea. Like, if you're going to do this full time, you have to understand that it's a lot of work and you've got to be dedicated. You can't just for a full-time job, you can't just dabble your toes. You have to fully commit, which I think is really useful. A couple of questions that came in while we've been talking about this. So one of them is, do you think it still makes sense for individuals to try and trade around positions versus just holding a diversified portfolio over the long run, given the hidden trading costs of retail market participants and the fact that high frequency trading firms have wiped out a lot of the opportunities around specific news flows?
Yeah, so high frequency trading firms, I mean, there's still a lot of opportunity in the market. I mean, there's companies that have, they're worth 200 million, and I can see a piece of news and I can be the first buyer in the market. So there is opportunity there. Obviously, if you're not at the screen and you don't see the piece of news, then there's not much you can do. But you can definitely trade around positions, work your average down while keeping a core position in that holding. That definitely is possible. You just really have to think of the dealing fees. I mean, if you're trading £100, but it's £5 to sell and then £5 to buy, it's maybe not worth it because you're going to churn 10% of that trade in fees, which is ridiculous. But yeah, definitely it is possible. It's something you can do part-time. And yeah, I would certainly recommend to do that, trade around if you can.
Okay, I mean, that's useful to know. It's interesting to hear that it's still worth trading around positions rather than holding on, and that the high frequency trading firms don't have a complete monopoly on markets and news flows. I think that's really useful. I think it probably harks back to the same thing you said, which is pick your market. You're never going to be ahead of like US companies because they're working on US time, and if you're not on the screens until 4 o'clock in the afternoon or 11 o'clock at night, because that's when their trading gets started, you're always going to miss out on opportunities. So you've got to make sure you're picking the markets that you want to trade in effectively. I think that's a really good point.
Yeah.
So another question that came through was we've got somebody in the call who's been a trade analyst in Northern Trust in India for the last couple of years. So he's mostly working in the back office settings in security and like APAC markets, which he's asking which role would be more suitable for me to go into to further my career after the trade analyst role. He's interested in the investment banking sector, and things like any side courses or any extra courses or qualifications that might be useful to like progress his career.
So the gold standard is the CFA, the Chartered Financial Analyst, which is incredibly tough. But that is respected by pretty much everyone, and it's incredibly difficult. But aside from that, I never went down that route myself, so I wouldn't really be the best person to answer that, I'm afraid. I'm sorry.
That's quite all right. I mean, I appreciate that investment and the financial sector is an incredibly broad and diverse sector, and so the routes into and progression from various roles are many and varied, and nobody's going to have an answer that fits every particular opportunity, which is absolutely fine. Another good question that came in is: do you see a greater role for ESG investing among retail investors?
I mean, among retail investors, I mean, my first goal is just to make money, to be honest. I'm not really bothered about ESG. If it is, then great, but it's not something I sort of consider. If you want to be environmentally conscious, then you can do that. But if to do that would detract my returns, because if I want to buy, for example, an oil stock, which is, I think we can say, is bad for the environment, if that makes me money, I'm going to buy it. But certainly with funds, I think ESG is going to be the next buzzword. So I'm going to be looking out for up and coming ESG stocks, not because I care for the environment. I mean, I do, but it's not my goal. But I know that institutions will be buying those stocks and push the prices up. So that would be why I would buy, if that makes sense.
I mean, I was going to say, for a complete novice such as myself, my first question would be, what does ESG stand for? So I can make an understanding of the process.
I actually don't know. Is it environmental, social governance? I mean, I know what it's basically about the environment, but I'm afraid I don't know what it stands for.
That's absolutely fine.
I just know it's something to do with green things.
Yeah, I assumed it was something along the environment, which I guess it's something you alluded to earlier, which was the idea of being on top of news, so you know that companies are going to invest in ESG in the future because it's a hot topic, and so you're now keeping an eye out on those things. I've been told in my chat it's environmental, social, and governance.
Oh, that's good.
There you go. But because people are interested, companies are interested in that area and in those stocks, you're going to be keeping an eye out on those because they're going to be things that go up. So it brings you a return. I expect that brings onto the idea of keeping an eye on a broad series of news outlets. So a good couple of examples might be the Suez Canal blockage that's just finished. That news has cropped up. So it's okay, what companies have been affected by that? Is that going to affect my portfolio? Does it give me an opportunity? I know obviously one of the big things for UK markets is Brexit. How is that impacting the market? Do I need to change my investment? So I guess the summary of the question is, are there any particularly prominent things or things in the news that you keep an eye out, or like a Google alert for, to go, that's happened, I'll need to adjust what I'm looking for?
So I don't actually watch any news at all, which I guess sounds a bit weird from someone who's active in financial markets. But if it's important, I take the opinion that it will come to me through various chat rooms or on Twitter or something like that. But you're absolutely right. I mean, I sold a company that sells bikes in the UK the other day because I thought if this ship stays stuck, there's a chance that the supply is going to slow down, which in turn is going to hurt sales. And if you're in the small cap UK smaller companies, you can get an edge on things like that. So I mean, we talked about high frequency firms earlier. Things like Vodafone, FTSE 100. I've got absolutely no edge there. I mean, it would be impossible for me to beat the institutions. I mean, they've got 10 banks looking at every single transaction to come up with a fair value of the stock. But when it's smaller companies, they're sort of unloved by institutions. It tends to be retail investors. So that is why I trade that market. But absolutely, it's possible to get an edge there if you do your research, and if you know the company and you know the drivers and the risks, then you can look out for those and respond to them.
Yeah. Okay. I mean, that's really useful. One of the questions that's come up as a result of just talking about the ESG investing is, do you think there's any different advice if people specifically wanted to get into ESG investment, or do you think that going through either the standard like Big Four investment banking routes or starting off on your own, the same advice holds true? It's just a specific group of investments that you're looking at rather than any and all.
Sorry, could you repeat that?
So it's do you think there's any different or specific advice if you specifically wanted to go into ESG,
right,
rather than just general investment?
Okay.
Are the standard ways in still the same, or?
So do you mean invest in companies or work in ESG?
I would expect, let's start with investing in ESG, working rather than maybe working for a company, because I think that's a broader application.
Okay. So there's the London Stock Exchange's green mark, which is awarded to companies that have a certain percentage of the revenue, something to do with green energy. So I mean, if you look at that, then you will find a list of companies that have been awarded that ESG status. There'll be funds, ESG funds, which specifically invest in ESG companies as well. So they're available. ETFs, but always check the fees, the hidden fees, because some of them charge a ridiculous amount of management fees, even if they don't actually make any money, which I think is disgusting, but I mean, that's how it is. Always check the fees, even on these green energy funds. And the green mark from the London Stock Exchange.
That's really helpful to know. Somebody in the chat has asked what your thoughts are on alternative assets. They call them fear of missing out assets. So things like non-fungible tokens, Bitcoin, all those sorts of things. Do you think they're like a worthwhile thing to do, or?
To be honest, that it's too clever for me to understand. I mean, Bitcoin, I don't really know how it all works, so I tend to just stick to what I know and where my edge is. Yeah, I mean, 2017 was great if you're in Bitcoin, but it's taken what 3 years just to get back to break even on that. So I mean, it's a hugely volatile asset. And the FCA have now banned the sale of Bitcoin to retail traders. So now you have to actually be a professional in order to buy it. I mean, you can get exposure elsewhere. But yeah, I mean, I can't really have an opinion on something I don't really know much about. I don't really know what NFTs are, but people are paying crazy amounts for them. Is that sustainable? Probably not, but you can't really call the top on insanity. That's just something I've learned through experience. You know, you bet on a company going down, so you short it thinking that it can't possibly go any higher, but it always can. So yeah, don't try and call tops on anything.
I mean, the GameStop is a good example, isn't it? Like, oh, well,
yeah.
You know, the big company shorted it to say we'll make money because this is only going to go down, and then the Reddit Wall Street bets thread just hammered it through the roof, and companies lost billions. So it is true that you can't. There's no such thing as a sure thing when it comes to markets. I guess I'd expect that the advice, if you do want to get started in NFTs or non-fungible tokens, is probably the same, which is don't go all in. Like, if you want to get started,
I think that's probably sensible. Yeah,
put some money in, see how it gets on. Maybe treat it like a long-term investment. If Bitcoin is taking 3 years to return to even, and just assume and hold to the fact that it will eventually increase its market value. But I think that's no different than any other stock, except they seem to be much more volatile than a standard market. So
yeah. I mean, they're very volatile, and I think at the moment we're in the mania phase, where people are paying ridiculous amounts for any asset that's going. And you know, who knows? Maybe Bitcoin will collapse 80% again, but then no one will want to buy it because it's not very exciting anymore. So I think, to an extent, if you want to make money in trading anything or investing anything, you've got to be prepared to do it when there's no market hype in the price. I mean, if you were buying Bitcoin last year at 6,000 when no one was interested, or whatever price it got to, you've done pretty well. But if you're buying it now, the people who were accumulating then are now selling to you. So I mean, who do you want to be? Do you want to be liquidity for someone's exit, or do you want to buy something unloved when it's at the bottom? And that is certainly quite well in the last few years.
Yeah. I'm conscious that obviously it's the middle of the day, and people are giving up lunchtimes to watch this. So I think if we start to think about wrapping up, and I guess one of the final things are any sort of final core advice that you would give to anybody starting investment. What's like the main 1 or 2 things to really think about and like understand to get started, or to think about moving into the sector?
So I mean, starting your own account, the thing that I realized is that it actually is possible to make money investing, and you can find stocks that can go up 2, 3, 5 times if you actually do your work and you're willing to wait and see the story out. So I mean, that was quite inspirational for me when I got started, because I could see that it actually was possible, and that sort of gave me the motivation to carry on going down further the rabbit hole and just learning everything that I could. I mean, it's, you know, I can't really see in 60 years that we will have a pension. I just don't really believe that it will exist. Hence why I think it's important that you do look after your own money, and you can use ISAs for tax-free gains. So I'd just get started, even if it's with a couple of £100. You know, that can snowball into quite a nice amount.
Great. that's been really useful. It's been fascinating for me, and I hope for everybody else, just to hear about how to get started in investment, how diversified the ways in to investment are, and no longer is it this idea of graduate, join a big four or a big major bank and work your way through, and that it is possible to do from your own home, and that you can do it just by a small start with a couple of £100 and then scale it up, or look at it as a completely viable option to just begin, which is absolutely great. So thank you very much, Michael, for giving up some time today to talk to us about your particular experiences and your knowledge. I hope everybody found it really useful and insightful. I know I did. I hope people have taken away good ideas, tips, and thoughts about how to get started in investment and maybe their next steps. For everybody still in the call, we're going to launch a quick feedback poll just to let us know what you think about the event. So that should be popping up on your screens in a couple of minutes. So if you could fill that in, and then we'll probably be calling the event to an end in a few minutes' time. Just enough time for me to say we will be running these events every month with a different sector in mind. Next month, our theme is the hospitality sector, which obviously has a major downturn thanks to the pandemic. So we're going to be talking to alumni about how they see the future of the hospitality sector. That event will be on Wednesday, the 28th of April at 6:30 GMT. So if you're possibly interested in coming to that, please do sign up. You can go to our website, which is on the screen now, and you can sign up. And so that's all that's left for me to say is, again, Michael, thank you so much for your help. Thank you so much for giving us some time. And hopefully I'll see yourself and some of the alumni very soon, perhaps even at in-person events before the end of the year.
Yeah, well, thanks for having me on, Jeremy. Thank you.
Thanks very much. Have a lovely day, everybody. See you soon.